Let's say two investors retire with the same $1 million portfolio. One generates $40,000 a year, while the other generates more than $130,000 a year. The difference isn't how much they saved. It's equal. It's how they structured their portfolio and what they invested in to produce income. No waiting, as always, I'm giving it to you up front. Today, I'll show you 3 common income streams using a simple $1 million example. Income stream number 1. Let's start with the conservative approach. If your portfolio generates a 4% yield through dividend ETFs like SCHD or bonds, your annual income is $40,000, while your monthly income is $3,300. I know it's not flashy, but it's relatively stable and predictable. The second option is REITs, real estate investment trusts. They often pay higher distributions because by law they are required to distribute most of their income to investors. At a 6.5% yield, your annual income is already at $65,000, while your monthly income is $5,400. That's a meaningful increase in cash flow, while still staying within traditional income-producing assets. Lastly, let's look at a covered call ETF such as QQQI. This fund owns Nasdaq stocks and generates extra income by selling call options on part of the portfolio in exchange for option premiums. QQQI's recent distribution rate has been around 13%, although yields have fluctuated over time. Using a 13% yield for illustration, your annual income will be at $130,000, while your monthly income will be at $10,800. That's more than 3 times the income generated by a 4% portfolio. The trade-off is that some upside is exchanged for current income, which is something every investor should understand before chasing yield alone. Personally, I would not put the entire $1 million into any single income source. I prefer base and income approach. For example, if you put $500,000 in VOO or S&P 500 and $500,000 in QQQI using current yields, QQQI will give you $65,000 a year, while VOO will give you $5,000. Total estimated income will be $70,000 annually and $5,800 a month. The advantage is that most of the portfolio remains invested, while still producing meaningful income. If you'd like to see the portfolios, allocations, and examples I'm building for my own investing journey, join me on Patreon at InvestorHIQ. That's where I share deeper portfolio breakdowns, research, and income strategies. Keep focusing on the edge and ignore the noise. See you in the next one.